So on a weekly time frame, the S&P 500 is at all-time highs, and we recently just had Cathie Wood just drop a video on the ARK Invest YouTube channel just recently, and she came out with a pretty bullish thesis that I want to go ahead and play for you guys and then kind of just touch on it, because she said something that was pretty interesting that could kind of suggest a long-term bull market. Now, again, I want to point out that we are at all-time highs on a weekly time frame, and we recently got this pretty interesting report from the American Association of Independent Investors with this huge bearish kind of sentiment, right? And so we have this divergence. The S&P 500 is at all-time highs, but retail investors are very bearish right now. Now, this could be a huge contrarian signal, because oftentimes when the S&P 500 is hitting at all-time highs and retail sentiment is leaning bearish, this type of divergence could really be that strong contrarian signal where the market could actually continue climbing if pessimism flips to optimism, right? So just something I wanted to point out, right? So a lot of people are kind of speculating that, okay, this secondary trend of the bull run that we had since the big drop earlier this year is likely to fall downwards. Now, Cathie Wood, I don't think in this video is even addressing a secondary trend. I think she's just looking at things from a long-term picture, and she's pretty bullish, especially in regards to what we're seeing with productivity. So I want to go ahead and play this clip over here just so you guys could see for yourself with Cathie Wood.
On this slide, just to give you a sense of where GDP growth and productivity growth are now. This is on a year-over-year basis. They tend to be highly correlated, but you can see the real surges in productivity as measured by as depicted in the green line here. They tend to occur at the beginning of recoveries after recessions. Well, we've been in a rolling recession, and the fact that productivity has held up this well for this long is really saying something about a secular change in productivity growth, and we think it's going a lot higher. We wouldn't be surprised to see 5% or more sustained for much longer than just at the beginning of the rolling recession and expansion. We think the new technologies evolving today, and we talk about them all the time: robotics, energy storage, AI, blockchain technology, and multi-omic sequencing in the life science space, are going to drive huge productivity gains. We're looking forward to watching where those productivity gains land.
Okay. So a couple things that Cathie Wood actually ended up saying here, which I want to go ahead and take a look at the S&P 500 again. I'm going to go to a daily time frame. And the reason I want to go to a daily time frame is because I actually recently posted this as well in a previous video. And I talked about how, we've had this long extension of a rally without having a 5% pullback. And so we're kind of overdue for a 5% pullback, which would kind of make sense if we just had a 5% pullback, but still continue to see the rally extend, right? Because everyone's saying it may not be just a 5% pullback. It might be a huge crash. But I don't think that might actually be the case. And something that Cathie Wood mentioned, by the way, let's actually plot some Fibonacci, not extensions, but some Fibonacci levels over here, or some retracements. And interestingly enough, right, 5% down, which is, we're kind of overextended for that pullback, would put us a little over here at around the $609.50 area for the S&P 500, which interestingly enough was the resistance back in February. So I just find that pretty interesting. That might be as far as we go until we ultimately actually push up, according to Cathie Wood, right? Now, Cathie Wood doesn't talk anything about a pullback because, of course, she's not looking at the secondary trend. She's talking about just things from a long-term perspective. But one thing that she mentioned, right, is that, she's really bullish because of productivity and how GDP growth usually surges right after a recession, but this time productivity is kind of staying strong, even though we're having what she calls a rolling recession, which I agree. I think we are in a rolling recession. And so her point, we're seeing this long-term shift where productivity can grow 5% or more for years, not just the short term. And so She's saying that this is likely due to AI, robotics, blockchain, biotech, which she believes is going to drive massive efficiency gains across the economy. Now, if she's right, that's a huge tailwind for the S&P 500, being that a lot of these huge companies are invested in AI, robotics, and blockchain technology. Now, I'm not too sure of biotech, not too familiar there, and a lot of those biotech companies, they tend to be smaller companies that are on the forefront of the changes of what's going on in the healthcare industry. But in other words, she's saying that we could be at the front end of a multi-year bull run. And the S&P 500, of course, with names like Nvidia, Tesla, Meta, would be, a beneficiary, of course, of the advancement of technology. Now, this makes sense, especially if we continue to see a lot of earnings calls, right? We've heard so many earnings calls mention or attribute their recent growth to AI, especially in terms of capital expenditure, being able to survive and go much further because of AI. And I think that's the trend that's going to continue. And so I think one thing that we should probably be aware of is that from a technical perspective, yeah, we may go back to the highs of February. But I honestly, and this is, I don't often always agree with Cathie Wood on things that she says with Tesla. Sometimes I disagree. But I am in the camp that we are actually on a multi-year bull run, as she mentioned as well. But I want you guys to let me know in the comment section below, do you agree or do you disagree? Now, when we take a look at ARK Invest, ticker symbol ARKK, which is the flagship ETF, it's doing pretty well for this year. But, let me remind you, she fell off heavy after the pandemic. I mean, Cathie Wood was essentially like a queen of the market in terms of fund managers back during the pandemic, but she got obliterated in 2022, and she didn't really have any good trades that did well back in 2024, but now she's making a huge recovery, and I think it's because she's just been really betting on the long term of AI and robotics, and I'm a big fan of those two segments, but only time will tell. Will Cathie Wood again reclaim her position as the queen, although she had to kind of suffer for the last few years? A lot of horrible articles written about her. I've said some things bad about her, like, hey, this was just horrible. I mean, as a fund manager, she should have done something else to go ahead and protect the gains of her investors that were invested in her ETFs. But she again is making that comeback, and so we'll have to see. But I do agree that we are likely to possibly have that pullback, but long term still continue to grow, right? I mean, we still have the developments for AI. We just had GPT-5 roll out. Grok is just rolling out new updates. We're constantly getting brand new updates, and I think it's just going to be the trend, the meta for the next few years. And I think we're going to see like a crazy shift that we honestly wouldn't have believed a decade ago, right? But with that said, you guys let me know in the comment section below, do you agree with Cathie Wood? And with that said, I'll see you guys on this next video right over here. Take care, guys.